A lot of people think that the Fed has been successful in reducing inflation because, it went from 9 down to 3 will complete the journey, right? Because we're almost there, but we're actually miles away because the main reason that you saw that big drop from 9 to 3 was a collapse of oil prices and other commodity prices that was basically brought about by a surge in the dollar, where currency traders were starting to price in all the rate hikes. So the Fed actually already got all the bang for the rate hike buck. Now, oil prices are headed back up. We're back above $81 a barrel today, headed higher. Other commodity prices as well. The dollar has peaked, I think, and is declining. So the headline CPI probably has bottomed out in the low 3s, and now it's headed back up. Meanwhile, if you look at the core, which is what the Fed claims is more important anyway, that's still around 5. And the decline in the core is far less than the decline in headline. I mean, it's barely gone down, despite the fact that we've moved interest rates from 0 to 5.5. So if the terminal rate is 5.25, 5.75, 6, that's not much from where we are now. And so why would that actually do anything when we haven't seen a meaningful decline? And also, people forget that these rate hikes are in and of themselves price hikes because it's the price of credit, the price of borrowing. And so every business that has debt is now having to pay more to service that debt, whether it's your landlord who's got a mortgage, a commercial mortgage that's resetting, or it's a business that has borrowed money to purchase plant or equipment and has interest rates to pay. That's just like labor costs or raw material costs. It's another cost of doing business that is rising. And so businesses then try to pass on those higher costs to their end consumer with higher prices. So as higher interest rates continue to work their way through the cost structure, you've got more upward pressure. So I don't see how the Fed has really accomplished much of anything. And also, if you think about the way rate hikes are supposed to reduce inflation, and Powell will admit this when he talks, they're supposed to reduce aggregate demand by making it more expensive to borrow so that people will borrow less and they'll spend less, and that'll, slow the economy, the way they describe it. But none of that is happening. Credit card debt is at an all-time record high. The government budget deficit